Hi, I'm Jason Mitchell, CEO of the Jason Mitchell Group, America's #1 real estate team. And I wanted to do a video because there's a lot of uncertainty everywhere right now. I think we can all admit that. And there's a lot of, from the pandemic to what's the market going to do, the stock market, the real estate market. And I'm not a doctor, so I can't speak on the pandemic, and I'm not a stockbroker, so I can't speak on the stock market. But what I can speak about is the real estate market. Because the question has been, and it always is year over year, I feel like I'm buying at the top. Well, in an appreciating market, every day is at the top. Every week is at the top, and every month is at the top, because the market's going up. And the market's been appreciating since 2010. But last year, we saw record numbers of appreciation. We also saw record low interest rates, which led to that. And what I will tell you is, the reason the home prices will continue to go up and up and up is because we have no inventory. It's of nothing more and nothing less. There's not a lot of homes to buy. And so when there's lack of inventory, you have higher prices. People are willing to pay more, right? It's just economics 101. And we can't build our way out of this because there's just that few of homes available. And so as we continue to progress 2022, we're going to continue to see low inventory, which means that home prices will continue to rise. In fact, of the three main places that, like CoreLogic and Zillow, that tell you, hey, this is our predictability analysis, the average is 11% across the country. That's a big number. That's one thing. But the scary thing about people that are sitting on the fence right now is that interest rates are going to go up this year. The Fed has announced that to combat inflation, that we have to have interest rates rising in order to control our current inflation problems that we have. And they're predicting 3 to 4 rate hikes this year. Now, that may not seem like a whole lot, but you have to put that in perspective. If you're considering buying a home, and let's say today you can get a 3% 30-year fixed, and let's say that 30-year fixed by the end of this year is 4.5%. So you're paying 1.5% more interest on your money. On a $400,000 home, that's over $350 a month. Times, and that's 1%. So it's close to $500 a month more by waiting a month, times however many months you live in the home. So let's say the new home that you purchase, let's say you live there for 10 years. That's 120 months times $500. That's $60,000 net. You got to make 90 to take home 60. So from a gross perspective, it's $90,000 in difference by waiting if interest rates only go up 1.5% this year. Think about the impact that that has. Think about how much money you make on a yearly basis. If you make $100,000 a year, you're essentially giving away 1 year of work for free by waiting, by saying, I think the market's going to go down a little bit, by trying to play predictor. Just like everybody in 18 said the market was going to go down, and 19, and 20, and 21, and here we are. We're up, in some markets, we're up 60% from 2018 alone. And when the best of the best and smarter people than me tell you that they're predicting another double-digit year, even if it's only 5%, even if it's only 6%, think about how much money you're missing out on, not only from an equity standpoint, but if interest rates go up, which they will go up this year, think of how impactful that is to you in your future. Think about if you wanted to rent that home out in the future, the first home that you bought or the next home you bought. Say you plan on living there 3 years, but then you want to turn it into a rental. Well, guess what? Your rate's going to be higher. There's so many things that are telling people right now that if you've been on the fence to buy a home, you got to get off the fence, because interest rates are going to go up. And forget the price of the home. If home prices go down in 2023 or 2024, so what? At least you own your home. At least you're in a 3% fixed rate for the rest of your life. It doesn't matter what home prices do because you have already purchased that home. It's your home. You're paying down principal. You're getting an interest deduction. And in most years, you're seeing appreciation in your home. If you're buying a home for yourself, there is never a better time than now. Even in the down market that we had, even in the Great Recession, there was still no better time than now. It only took us 3 years to get out of that. My point is that interest rates will go up this year. And if you're considering buying a home, you need to buy based on that factor alone. The housing market will also continue to go up in value this year. Now, as far as next year and the years after that, who knows? Anything can happen. But if you have a 3% 30-year fixed, or 2.5% 7-1 ARM, or 10-1 ARM, or whatever, it doesn't matter. It doesn't matter because you're locked in. So think about that. And if you are considering buying a home, I'm telling you, do it sooner than later. Because by the end of this year, it could really, really mean tens of thousands of dollars of difference out of your pocket, literally. So buy a home sooner than later. That is my advice for today. Thank you.